Apologize for the delayed videos. Haven't had water in the house. Wanted to shower up. Shout to my boy's house, so we're all good. Pretty flat day in the market today. Nothing crazy. Didn't break any sort of resistance levels, so it's not like I'm concerned about technicals at all. We're on some sort of upward trend as stimulus gets passed. But the market was rather flat today, down at some points in the day across all indexes. It's flat because we're waiting to hear what the Fed says. We're relatively optimistic on the picture. We're pumping in another 1.9 trillion. Obviously, that's been somewhat factored in. So we're not seeing any sort of explosive growth on that. I think that's healthy. It would have been unhealthy to see an explosive move. But right now, we kind of got to see what the Fed does with interest rates. And I have my thoughts about interest rates, and I'll get to them in a second. But first, I'm going to address the broader market's thoughts on interest rates. And the broader market is somewhat nervous about rising interest rates because they believe that if interest rates rise, all of a sudden, treasury yields are going to become more attractive. And people are going to want to own stocks or want to own stocks that present future cash flows when they can get better now cash flows through a treasury yield. Now, I don't think that's truly the case because if interest rates rise, I don't think interest rates actually rise. They might rise in nominal terms, but because there's inflation, they're not going to rise in real terms. And real terms is what matters, in my opinion, and I believe truly in the long-term opinion of everyone else. So I think it doesn't really matter what the Fed says, but it's likely that the Fed could say we're going to, we don't want rates rising super quickly, but it's not going to surprise us if rates rise somewhat. That will be, a neutral message. If the Fed says we want to keep interest rates low, that will be a positive message. If the Fed says we're not concerned by the current movements and we're totally cool with it continuing to go on at whatever pace, that will be a negative message. That will be the next catalyst for the market. That will decide, okay, are we going to push 4,000 and higher? If we push 4,000, expect to get to 4,100, 200, and 300 on the S&P. If the Fed is relatively easy, maintaining a, low interest environment tone. But if they're okay with rising rates and they're like, you know what, we're honestly happy to see that, expect to not continue a massive run or a modest run, a flattening, not too explosive. I don't think a massive sell-offs in order either. But, some give back from the recent runs is possible, some cooling off. And letting that take effect until inflation comes back into the picture and people realize that inflation is truly an all lift all boats event for the market because companies will sell products at higher prices. They will increase their earnings. And this is something, and input prices, yes, will increase too. But we've seen in the real estate market that copper is up over 100%. Lumber is up some similar percent to massive inputs into real estate construction. Real estate sales prices are up double digits, about 14% year on year. Yet the housing market is having a boom. So I'm not concerned about inflation. I believe inflation is a lift all boats event. I'm not concerned about rising yields either. And yields are rising because of inflation concerns. I think that rising yields are not happening in real terms and are only happening in nominal terms. So we're going to hear what the Fed says. The Fed has more power than I do. This is just my opinion. I believe my opinion is the correct opinion. We're going to hear what the Fed says. That's going to determine what happens. And we're hearing that tomorrow. So until next time, peace out.